What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, I'm going to be covering a highly requested stock, and that is the Paysafe stock. I do have a position in Paysafe. I believe my average is right around $11. I'm not really averaging down right now because I'm in tons of other positions, but if I do have the opportunity to free up more cash from, other stocks in the green, I would average down on Paysafe in the $8 range right now, because I really don't believe Paysafe should have never dropped below $10. And I'm going to show you the exact reasons why. This company has a lot of room to run in the future, and the company and management is making a lot of moves to position themselves to be a good growth stock in the future. So if you enjoyed this video, be sure to subscribe to the channel, and don't forget to smash the like button and drop a comment. Where do you see Paysafe headed next year? I really believe 2022 Paysafe's earnings are going to get tighter and tighter, stronger and stronger. I believe next year Paysafe's growth is going to continue to accelerate because of the deals and acquisitions that they've been doing all of 2021. These are going to pay off in the short term. It takes a little bit of time for these deals to go through. Let's get into the video. All right, guys, I'm on StockWits right now. We could see Paysafe had a really good day today. We don't know if it's really broken that, downward knife, downtrend for the past 6 months. I don't even know how long. It's been absolutely forever. But just take a look at some of these stocks trending above, okay? I want to review their numbers compared to Paysafe, okay? We'll take Root, and we'll also take Wish, and we'll go over a couple other ones that are trending right now. And I want you to really look at these earnings reports and tell me if you believe Paysafe should have been dropping this significantly after their last earnings report. All right, guys, just looking at the Root stock, this is trending on StockTwits right now. We can see the last earnings report in June, revenue declined 26%. Net income, negative 359%. Another one, Romeo Power. If we scroll down, revenue, negative 17%, guys. Net income, negative 308%. And we also have Wish that is trending right now. Revenue, negative 6%. Net income, negative 900%. UWMC, another huge SPAC. Revenue down 16%. Net income down negative 98%. Then we come across Paysafe's last earnings report in June. Revenue, almost 13% incline. Net income is up 141%, guys. Do you see the numbers compared to these other recent 2021 IPOs and also 2021 SPACs, guys? Paysafe is actually performing. I just showed you 4 other companies, 2 in which are trending right now inside of the market, guys. What I'm trying to tell you is, sometimes high quality companies take time to get adjusted to the market, okay? Even with the earnings report like this, because the guidance was a little bit soft, the stock sold off an additional 30%. I thought I had a great average at $11, and then the stock just continued to drop another 30% for the past 3 months heading into the next earnings. Understand, these numbers are pretty solid, and I could see Paysafe in 2022, I could see this being a 20% to 30% growth stock by the end of the year, guys. That's PayPal, Marvel. That's some solid growth numbers, guys. Those are some amazing growth stocks, PayPal and Marvel, when you're talking about 20 to 30% revenue growth. So, guys, this company is valued pretty low right now with the type of revenue they're doing. Their projections are getting into the $1.7 billion range next year or something like that. So, you take a look at these numbers on net income and revenue. This is just 2.5 months ago, guys. You tell me how these numbers look compared to all of these other companies that I just showed you, okay? So understand, we're getting a lot of bears and fake spam accounts on the Paysafe chat forum. Scam company, bankrupt, management is scamming people. Guys, that is all FUD. You just seen the numbers. This company is performing. It's just sometimes, there's always weird reactions when companies are just getting onto the public market. So we've seen this happen with SoFi, guys. SoFi was just $13 2 months ago, and I told you to continue to buy the dip on that one. So I'm obviously more bullish on SoFi because the growth is there. But Paysafe, guys, these are some solid numbers. So I just wanted to go over the earnings report with you guys. Revenue is increasing, and guys, they just did 5 acquisitions, right around this earnings report and so on. So we're looking really good entering 2022. I expect the company to really pick up, and we should definitely make it out of this downtrend. Once again, I will average down if I can free up some other capital on other stocks that are doing well. Maybe get a dip buy if this stock moves into the $8.59 range. I can average down a little bit. But, I really like my average, guys. You're not going to time the bottoms perfectly. I mean, this was like a $19 stock, I think last year. So anything in the $8 to $13 range is still a great buy, in my opinion. When we take a look at the valuation of where Paysafe is at, and the management and the team, they're making deals. They're making deals left and right, and we're going to go over that right now. Guys, this just happened today. Paysafe extends partnership with Zen.com to bridge the gap between cash and digital banking. Paysafe today announced that it extends its partnership with payments provider Zen.com, payments e-cash solution. Paysafe Cash can now be used by individual customers as well as business clients across 25 countries and Europe to make fast and secure cash deposits into Zen.com's virtual wallet. So, guys, the Zen.com, they're extending their partnership. So they've already been working with Paysafe and they are liking, the product. So they're extending. That's a great sign that, Paysafe is delivering on, what it says that they're trying to offer. Paysafe partners with FUBO Gaming. This was a couple of weeks ago. The stock sold off after this news came up. Guys, this is part of the game when you finally become a public company. Some of the news just doesn't react the way some companies do. So this is great news for Paysafe. FUBO is absolutely exploding. It's another stock I'm recommending. Paysafe is partnered with FUBO Gaming. FUBO Sportsbook, the firm's mobile sportsbook, is expected to open later in Q4 2021. That's what I keep talking about. These deals are not, happening yet. They take time to get into place. Subject to regulatory permissions, it will leverage Paysafe's for credit and debit card payments, the Skrill USA digital wallet, and Paysafe's card and Paysafe Cash e-cash solutions. Paysafe expands FoxBet partnership into Michigan. Understand there's tons and tons of U.S. states just beginning to open up, just beginning to get legalized. I believe not even half of the U.S. is even legal. And Paysafe is the number one company in iGaming right now. So they have their foot in this market that is just continuing to expand. Building on Paysafe integrations across multiple states, FoxBet has now strengthened its Michigan sportsbook payments, offering with the Skrill digital wallet and Paysafe card eCash solution. So guys, Skrill is a company that people love that Paysafe has partnered with. Paysafe does not own Skrill, I'm pretty sure. So Skrill is, what people are really looking for, and Paysafe has a great partnership with Skrill right now. And guys, Daniel LOEB is an investor that I have covered in multiple videos, including Paysafe and SoFi. And this article shows that these are the top 10 stock holdings of Daniel LOEB. If we scroll down a little bit, the top 10 as of Q2 2021, this should be updated, into Q3, and we'll see, the different positions he has. But guys, take a look at this. Paysafe and SoFi are his top two growth stocks right now, inside of his portfolio. A lot of these companies are legacy, Procter and Gamble, Intel, Intuit, Amazon. So he has a lot of legacy and more stable companies. And we already know Upstart has been his, massive five-bagger. But these are his new upcoming companies, behind Upstart. It's SoFi and Paysafe. If we go over to Paysafe, all SEC filings, a lot of that FUD on these, Paysafe, StockTwits forums, investors, insiders dumping, everyone's selling out. That's not exactly true, okay? One of the large investors in Paysafe did cut a portion of their portfolio. I believe it was Blackstone. I believe they sold off about 20% of their holdings. But guys, the thing is, their position was so large that it did have a major impact, on the stock, and on top of, retail investors selling out. I believe that's why the stock made its way under $10, because, they sold out a little bit of their position. But guys, there's still tons and tons of investors in the stock. And as of this date, October 7th, guys, which is literally, what is that, 12 days ago? If we click this filing right here, we're 723 million shares, and you could see the big whale investors, CVC and Blackstone. I mean, they still have, close to 300 million shares. These guys are going long on the company, guys. And anyone saying, Bill Foley is a scam artist, guys, this is Bill Foley right here, Kane. He has 62 million shares. Daniel LOEB that I just went over, he's right here. He has 39 million shares. So guys, do not believe the negative, headlines and, things you see, these spam accounts, they want you to sell. The big money is going long on this company. It just takes time. And if you looked at that last earnings report I just showed you, we're talking 13% growth, net income positive. This is a real company that's already profitable, guys. If they can really get their legacy accounts removed, all those partnerships I just showed you, this could not only be a great, stock in 2022, but this could be a massive company in 2023, 2024 if you go long on this stock, okay? So I know it's been a horrible journey, possibly the worst journey you could think of where this stock's performance has been. But guys, in my opinion, this stock should have went up on that last earnings report. Guidance, did hammer them a little bit, but tons and tons of companies' guidance was getting hammered because of, slowdowns, economy, supply chain issues. So they did have, slowdown in their guidance. I'm telling you, these deals are going to start going through next year. But as you can see, these big money investors are not selling out of their stock. These are 50 to 150 million shares, guys. I mean, this is serious stuff right here. So if you stay patient, I'm telling you, you could hit it big on this one. And if we go over to Fintel, Paysafe Institutional Ownership, and we scroll down, okay, I went to the top, which is the biggest investors. The article I just showed, the document I just showed you, these are the same guys. But if we look right here on shares changed, okay, this is the important part. You could see 0, 0, 0. Nobody is selling. Blackstone is the only investor that's sold out 23% of their holdings. That is why I believe this stock really dropped, because if they sell out 20%, I mean, that's going to be a 10% drop on the stock, because these guys owned, so many shares. So understand that they did sell out a portion of their stock, and that is why, the retail investor selling was extremely aggressive as well. But guys, this stock should have never dropped below $10. So if you have been buying this dip, I believe you're going to be greatly awarded in the next couple of quarters for sure. But as you can see right here, guys, none of these other institutional investors are selling anything. Nothing is being sold right now. And once again, guys, the spam that I've been seeing on the chat forums for Paysafe has been ridiculous. Getting people to try and sell. I mean, there's this one guy that's just been saying the dumbest stuff for like 6 months. And, I believe he's getting a lot of retail investors to sell, but I'm not selling my position. I would love to average down on this one. I just don't have any freed up cash right now to buy at SoFi at these ranges. Once again, I did say my average is $11, so I'm down, pretty big. But guys, I mean, $11 could be an absolute steal if we're talking, 1 to 2 years from now. So this stock could go a lot higher. But guys, I want you to know Bill Foley has performed on his investments, guys. These are his investments right here, Black Knight, Ceridian, Dun & Bradstreet, and I have some of the gains. And look, you may not want to look at these ones because they're, companies he's had for a long time. But look at these. Okay, this one was a 6-year change, a 3-year, and a 2-year change, guys. Look at the types of gains that this guy has done for his investors. Do you see these last three? 875%, 330, 565%. Guys, these companies have only been on the market for 5 years, 3 years, and 2 years. These gains are insane. 800, 300, almost 600%. You got to give the guys some time. I mean, look at the deals that they have put together. I didn't even talk about Pago Effectivo yet, and also via FinTech, guys. These are going to be additional 100 to 200 million, revenue streams in the next 1 to 2 years. I mean, these are global companies in Latin America right now, and they, have bought these companies out. They've been putting their cash to work from the SPAC transaction along with paying off debt. And I believe still in their last earnings reports, guys, they still have an additional $250 million in cash on hand. Okay, that might not seem like a lot, but understand this company has free cash flow. Over the course of a year, they could probably get their cash on hand back up to 400, 500 million, just a couple of earnings reports. So you have to be patient, guys, and understand, I mean, this company is making deals, paying down debt. They are trying to grow for next year. So I don't understand why everyone's freaking out about, some 6-month, price movement. The company is performing from what I'm seeing. Just take a look at the earnings. I mean, these earnings are solid. 13% growth, 141% net income positive. So once again, you saw Bill Foley. I mean, he has a massive position in the stock right now, guys. You just seen the guy's got like 50 million shares. You think he's going to sell at $8? Paysafe, he's not going to do that. He's going to try and sell this stock, $30 to $50 in the next couple of years. So you have to be patient. And also, guys, if we just take a look at tip ranks right now, I mean, of course, Paysafe had that weak guidance, so we didn't see a surge in, price target upgrades, but there's no holds, there's no sells, there's nothing wrong with this company. I mean, it has 70% upside, from the price right now, around $14. And if their earnings start, coming out strong, I mean, this could be a $20 stock the next earnings, with an upgrade next earnings to 25, and boom, next year, we're back at, 25 to $35, over 4 earnings reports. You got to be patient. Understand they're working with some amazing companies right now, and they bought out some companies growing really fast. iGaming is just getting started. They're the leader right now in America. And guys, I have the Amazon stock pulled up for you right now. Take a look at this. Amazon was $62 in 1999. Right here, you see it. $62 in 1999. Fast forward 8 years. The stock went up $6. 8 years of absolutely nothing, okay? I don't believe you're going to have to wait 8 years on Paysafe, but understand 6 months is not enough to determine, how large this company could be over the next couple of years. And I understand we're all about making money as fast as possible, but understand, I mean, this company could have promise. So it looks like they're doing all the right things, getting themselves in a better position. So I would just recommend to, be patient and let them get another 1 to 2 earnings reports under their belt and see how these acquisitions do in the future. I easily believe this could be a $20 to $30 stock next year. There's no reasons why not. This company could be growing at the same rate as like a Marvel or a PayPal. We're talking about $600 million in EBITDA projections next year or more. This company's profitable. It just takes time to get them into that growth stage because they are transitioning into the iGaming, removing all of their legacy accounts. So you guys saw it. It looks like Paysafe to me is doing a lot of great things. The earnings reports look solid. Analysts are bullish. No sells whatsoever. Just a little bit of weak guidance. And this market has been absolutely terrible for growth, the back end of the year. So this is the video I've been waiting to build up for you guys. That's why it's a little bit long. And I hope this gave you more confidence to just, put Paysafe aside, average down when you can, and, just let the management and company make its magic happen over time. And if you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Paysafe looked promising to me. You guys seen, all of the data from the institutional investors. You saw the earnings reports. You saw 5 to 7 acquisitions that they made. That does not look like a scam company to me, or a company that is, looking to go bankrupt. I mean, this company's been around for 20 years. I mean, they made it through the financial crisis. They're not going anywhere. They look like they're trying to jump into overdrive growth, like these newer, fintech companies that are just popping up, the past 10 years. So they're trying to catch up to where these other payment processors are at. And it looks like they're doing a great job to me, a global company. So you just got to be patient. Once again, if you enjoyed this video, be sure to smash the like button. Don't forget to drop a comment, and please subscribe to the channel so I can keep you updated on all of the growth stocks in the future. Once again, my name's Kyle. Hope you have a great day.